Hey, what is going on? Welcome back to the channel. In this video, we're going to be taking a look at Avax. I do want to say that I'm not a financial advisor. You should do your own research before investing money into crypto. If you haven't seen the previous update, make sure to watch that before watching this one so that you have more context. It's going to be linked in the top right hand corner of the video. Also, I want to mention that I have two donation links down below in the description. If you want to support Ukraine, you can do so by going over to the description to the official websites and you can donate directly to the funds. Thank you all for watching the video. Thank you all for supporting the channel. Let's get to the technical analysis. So, Avalanche is back in the buy zone. I gave you all the way back, 7 days ago, and I did have this support for quite a while now. And as you can see, we have returned to it here in September, and now we're retesting the zone in October. And I was expecting, or I am still expecting, some sort of a move to the upside in October to November. Potentially, we could get that from the middle of October to the beginning of November until the next FOMC meeting, and that's when we see the next final dump. Who knows? But meanwhile, it's all going down and sitting near the local lows. It's a great time to be accumulating because, as you can see, Avax has bottomed out here in June at $13.5 roughly. But you can see that it held this support here, and you're basically near that support. So this is a great entry zone in my opinion. Even if you're looking for a mid-term move to the upside, you can still take profits at the 55 daily EMA, and you can wait for some sort of a relief rally to take profits then. And if you're looking to buy into Avalanche long-term, then holding for the next 2-3 years, it really doesn't matter if you buy in at $16.50 or at $16.85, okay? So just keep that in mind. And as you can see, we got a rejection here off of the 20 EMA on September 27th. So that was a nice area for you to take some profit. And now you're down 10% since that move off of the 20 EMA. And I always tell you that the 20 EMA is a very important resistance level during downtrends. So if you start breaking it like you started doing here, then that was a good sign. But obviously then we had the Ethereum merge and everything dropped down. But even if you took profits here at the 20 EMA and you still went up above it and you just waited patiently, you could have bought back in 20% cheaper. Okay, and this was back in the middle of September, so not that, like 2 weeks ago basically. So you can have some nice trades here. You can have some nice swing trades. So you're still in this buy zone. You dropped out of the symmetrical triangle that we have on the chart. And potentially what I'm looking for is a retest of resistance. So we may come all the way back up here and retest this previous support as resistance. As you can see, this was a major multi-week support trend line for us, or multi-month even, I should say. And we have lost that here in September, and you haven't retested it as resistance. So potentially that's what could happen with this little relief rally that we may have. And I don't think it's going to be as bullish of a relief rally as we have seen for the past 3 years in October/November, simply for the fact that we are in a bear market right now, in the depths of a bear market. And I wouldn't expect too much of a bullish move. But then again, Polygon Matic and Cosmos Atom did a 3x in the depths of the bear market. So there is money to be made here. And for example, if we go to the daily RSI, another good resistance level for you to target is this red resistance trend line. Now, we did see a fake out over here in July and in August, and it could happen once again in November. I'm not saying that this couldn't happen, but mathematically speaking, you have one rejection here in November of 2021, another rejection in April, another rejection in September, and potentially, if you start running into this level here, you may get rejected once again, because out of the last couple of interactions you had with this trend line, you had a rejection to the downside 3 times out of the out of the 5 times, right? So potentially you could break to the upside, and I'm not saying that you have to take all of your profits over here. You may just take a little bit of profits. If you pump higher, take a little bit more profits. But keep in mind, if you continue breaking through a major diagonal resistance trend line, you typically see strong moves to the upside. Hence, we had this breakout, okay? But we couldn't hold the trend line as support, and we had this dump all the way into the oversold at the end of August. So right now, you do have a very, very good opportunity to dollar cost average into Avax. And if I compare the price action chart with the RSI on the daily, you can see, and probably some of you already see that, is that we have a bullish divergence. So this is basically when the RSI is printing higher lows. If I can just get the arrow mark, there you go. So as you can see, the lows for the RSI are continuously getting higher. But if you take another trend line here and you have the corresponding lows on the price action, you can see that actually that was a mistake. Actually, you can see that the lows are getting lower. Now, granted, here you're potentially printing a double bottom pattern, and that's a exaggerated bullish divergence in itself, because you have a horizontal support on between these two lows, and you still have a higher low on the RSI. So you do have a bullish divergence here in general. And usually after that, we do see a move to the upside. So this is kind of your looking glass. So like I said, we could target this red trend line as resistance. If you take a look at the price action chart, you can see that you do have the 0.382 Fibonacci retracement level. Let me just zoom out a little bit, at $19.12. So you may run into that as resistance, and that's where you peak out and you create another lower high, and you start coming back down from there. You also have the 55 daily EMA, which is going to be a major resistance for us to break. And you also have the resistance of the falling wedge, which was previously our support. So you have multiple resistance levels in that area. And to get there, you have to break above the 20, obviously. So you do have a couple of targets to the upside. If you start breaking back into this symmetrical triangle, which sometimes happens, sometimes you have a pattern going on for so long, you have this little fake out below, then you come back into the pattern, you adhere to the levels between the pattern, and then you break out and you carry out the technical target. Now, this below here is done to scare people. So they want as many people as possible to dump their coins so that they can enter at these lower prices, come back into the pattern, and get to the technical target of the pattern. Okay? Now, I'm not saying that's exactly what's happening here, but it is happening, and especially on the higher cap altcoins, and Avax is one of those coins, and I do think that we may even come back into the pattern and have a bullish break to the upside. Okay, so you do have another technical target here at the 0.5 Fibonacci level at $23.8, and you have the $29.5, which is the local high that we printed in August, which is obviously the golden ratio here. So potentially, yeah, if you start breaking through the upper resistance of the symmetrical triangle, you may run into the golden ratio once again, and you may get rejected back down. So if you're not breaking this high, I wouldn't be bullish at all, and I would simply take some profits once you're overbought on the daily and the 4-hourly, the 6-hourly charts on the RSI, and then I would wait for a pullback and buy back in. So yeah, swing trading is what you can do right now if you're careful. If you're selling once an asset is overbought, then that's okay. So let's switch over to the Binance website. So jumping into the weekly RSI for Binance, you can see that we do have some sort of a descending broadening wedge here, because you can see that the pattern is getting wider and wider as we go. And at some point, you're going to see a breakout, hopefully to the upside. And once you have that breakout, the target is exactly where the pattern was created over here at the index of 67.8. So that is potentially something that could happen moving towards spring of 2023. Obviously, we can go there even earlier, but why I'm saying spring 2023 is I believe that is the time when governments are going to start printing even more money, and the energy crisis is not going to be a very big issue for them. And obviously, because we're going to be through winter. And I do think that's when we may see a little relief rally in crypto. That's when we may start printing higher highs for crypto. And from there, we may enter the bull market in 2024, which I'm expecting, to be honest with you. So also, if we see a major capitulation, you may dump all the way down here towards the support, the descending support of the pattern. We have been bouncing off of it in the past for this year twice already. One bounce in January, one bounce in June, potentially another bounce here in December or maybe November this year. We'll see how things go, but just know that if you're down here on the weekly chart, this is a perfect buying opportunity. Even without the patterns and all the levels, you are oversold. You are below the index of 30. You are lower than you ever have been on the chart. So surely that should give away something for you. Then moving over to the resistance levels that we have here, obviously the index of 40 here is a major level. We have retested that as resistance and we have tested that as support previously. So you lost it here in May. You back tested it as resistance in August, and now you're coming back down, potentially looking for another resistance. Also, the trend line, the resistance-wide trend line here of the broadening descending wedge could play a major factor as well. We may run into that level moving into November, and that's where we see the pullback into December and January of 2023. And if you start breaking through this level here, your next resistance is going to be at the index of 47.1, because we did see a backtest of resistance of this level here in May of 2021. Then we broke above it in August last year. We had a back test in January. We had another back test in March this year. Then we dropped down in April, and we still haven't seen the back test of resistance. So that is something potentially that could happen. And then we may land into the previous support zone here, which will be our support by that time because we broke above it. And you can see that if that were to happen, then we would be creating higher lows and higher highs, and that is a very, very bullish thing to be doing on the weekly RSI. But that's a bullish scenario, and too many drawings, I do apologize, but hopefully you get what I'm talking about. If you break through this level, target the next one. And yeah, that's regarding the weekly RSI. The stochastic is in the oversold, so great buying opportunities based on that indicator. The weekly MACD is turning green, so we may see a move to the upside just like we did in the last fall. So in August, you printed the bullish cross 2021. Same thing happened here in August 2022. You print a bullish cross and you have an overextension all the way into November, and we could see that play out this year again. But keep in mind, we do have an FOMC meeting happening in November 3rd, I think, to be exact. So that is it, guys. Thank you all for watching. If I missed out anything important on the charts, please let me know down below in the comment section. Feel free to follow me on Twitter. Feel free to join me on Patreon. I'm gonna catch you in the next one. Goodbye and good night.